Fourth quarter GDP looking at 2.6%, which looks like a very big beat from expectations, which were 2.2%. So 2.6% coming in there. Personal consumption a touch lighter based on estimates, and core PCE on a quarter-on-quarter basis a touch stronger, coming in at 1.7%. I got to say, I was expecting something pretty bad. Maybe that was my bias because of the retail sales and such. So that also sort of lends a little bit more skepticism to what we saw in December.
Well, as you say, I mean, the inflation's a little bit more than what we thought it would be. At the same time, we didn't want to accept the retail numbers that were so bad. Are we not going to accept these because they're so good?
Well,
I'd be curious to see our reaction.
I think the business, here though, is if you dig between it, business investment wound up picking up. So that does suggest that growth could be a little bit more stable and stronger versus just reliant on the consumer. So I thought that was pretty interesting.
Which, by the way, is utterly fascinating, given what was going on in the markets, and the CEOs decided now's the time to invest. It's not what I would have predicted, but it's good news ultimately for the economy. So still with us are Abhay Deshpande of Centerstone Investors and Brian Weinstein of Morgan Stanley Investment Management. So Brian, I'll ask you first. Initial reactions.
Yeah, I was surprised when everyone would have taken the guess, given our memories of December, that no one did anything. It appears that wasn't true, or that the numbers are just noisy. I still think the market will look at it. Listen, it's good news, right? Not falling out of bed at the end of the year is helpful. But I still think people need to see live data to prove that things are okay now after what we lived through in December. But I'm surprised. I'm surprised that the strength is there on the business side. I agree with you. I would have thought that people would have just taken their hands off and said, take the ball, go home, and come back in January.
I mean, unless like November and October were quite strong and enough to offset any kind of December slow, because it was a software and you had equipment, that those were the two areas of really solid spending and research spending.
Yeah, remember though, these things can be revised. And they will be revised.
Yes.
It's seasonally adjusted. A lot of this is like,
But one thing I'll say, and we're not big believers of the recession is coming camp, but I think it's got to take that off the table a little bit, right? I mean, it just seems like if businesses are spending, I mean, listen, maybe we're not going to grow at 3 or 4%, right? We're just going to have this whole boring 10-year 2% period, which has not been so terrible. I mean, it kind of lends some credence to that theory that things just aren't getting as high or as low as the markets think they're going to.
And also, I think it's profitable to read this against what the administration wanted with their tax cuts, because they said, we're going to give you tax cuts, we're going to let you expense capital investment, we'll get capital investment that'll keep the economy going. A lot of people were saying by now we start to see the effects of tax cuts dissipate. If in fact it's not dissipating as much, maybe there's something to the theory.
Again, I think if you look at just how consumers are funding their spending, there's a lot of reliance on credit now, and less so on income, or as much as income, but then they're borrowing more to sustain this level of spending. It's hard for me to see that there's a sustainable 3% GDP kind of growth ahead of us.
Yeah, 3 seems high, but the truth is, if you look at the consumer sectors, yeah, you can find stress, you can find it in if you go into subprime, but the consumer's been fairly strong. They've still done a good job with their balance sheet. They've used some more leverage, but we're nowhere near the levels we were at when where that caused problems.
Exactly. I mean, it's gone up some, but it's still fairly healthy by historical standards.
Very healthy.
2.5% is above trend.
No, that's clearly above.
3%, that is very robust. The president's predicted that, but that seems a little bit high. But 2.5%, I think most economists would take that and run.
I think they'd gladly take it.